Good afternoon, everybody. Welcome to the show. It's time for the afternoon version of the Daily Caller. My name's Max. Appreciate y'all for being here. Okay, let's check out old Mr. Market here. All right. Let's look over here at, boy, it's a heck of a bounce into the close, or not even into the close this morning. A massive bounce. Okay, so that's a 1 minute chart. That's not going to help us out very much. Let's go look at maybe a 30-minute chart of the SPY, something like that. How about that? Gosh darn it. All right, so here's a 30-minute chart of the SPY. We opened in the mother of all gap downs today, and we filled about half of it. Filled about half of it on an opening to close basis. However, we got firmly inside of the prior day's range and closed inside there. So to me, that means we found acceptance in the prior day's range and probably revert to mean. You know, I mean, no guarantees, but I wouldn't be surprised if we, while we're in this range, bounce around in here somewhere. But of course, if we fall out, that we'll be looking for lower prices. Just depends on what happens. But this range is a range we've been comfortable trading in for a while now, right around 685 and 690. Let's look at the old Qs. But that bearish gap on top of us will be bearish until it's not, until the bulls can get a close on the other side of that. And we're right. I'm sorry. Anyway, at least we got through the middle of it today. So we'll see. But I mean, the idea is there's an order imbalance here. That's why a lot of people sold overnight that might want a second chance to sell or might not. We'll see. They didn't seem to be too interested this morning about 10 o'clock because this thing ripped straight up, or about 11 o'clock. All right, so let's look over here at, hey, Marcus, let's look over here at IBIT. Speaking of a trading range, I mean, this thing is just going straight sideways, rotating around 38. They have bearish imbalances above them here at 40 and also up here at 45 and probably ones higher than that. So the bulls have, another one right here at 49. The bulls have a lot of work to do. Let's look at Bitcoin itself so we can get price, see where the price closed. Okay, we hit 70. That's great. Pull back and closed at 68. I mean, that's better than a few days ago when we're down here at 63. We're still just rotating around, 60 to 70, but 63 to 70, something like that. Yeah. All right. Well, hope that 63 holds. I said the same thing about 70 and it did not, but maybe this one will. All right, so let's look at the divas, or who cares about the divas? They had a bad day. Let's just look at the divas real quick. Okay, well, I mean, yeah, if you look at it, let me make this bigger. Will not zoom when I want it to. A double right click is supposed to zoom. It's supposed to zoom, but sometimes there it is. And then you could do it again. It should give you an even bigger zoom, but whatever. All right. So you could see here just at the whole group of divas, I mean, really bad day for blocks, down 5.3. But, the rest of them didn't look great. Even K-Yield, which is one of the better ones, was down 3 something. ULTY was down 3 something. It's looking kind of like this back here, just as far as days go. Our bad days weren't as bad lately, but this one was nasty. Of course, we bounced towards the end of the day. If maybe we can get through the gap tomorrow, I mean, we'll see, but that's not a great sign. So now let's zoom out and let's go look at the rolling total return. Man, is blocks going to pass ULTY? That's really going to make me mad. Come on, blocks. ULTY had that huge update a few days ago. There's one day when ULTY was up 6 and blocks was up 2 or something, although I can't really see it on this chart, but it happened. It actually looks like, well, I remember it happening, but maybe I'm wrong. It looks like actually blocks had the big update lately. Whatever, they're both going down. They're both going down. Now, LFGY on a comparative basis looks better. Look, I mean, it's making higher lows and trying to trend the opposite direction, which ULTY is not. It's making lower highs and blocks. It's, I mean, just a mess. Anyway, then we have WPay that's also a bust lately, down 21%, you know. Aren't they fixing that or something? Don't they have a new formulation coming out? Kind of like YMAX is doing. I forget the details on it, but I thought they had a new formulation coming out. Anyway, it needs to come out. It needs to come out. ULTY had a terrible day today, lost 3%. Still holding up a lot better than these other dogs, but no excuse. Lost 3% today. Now, on a comparative basis, GPTY did much better than WPay. Gosh, but K-Yield also lost about 3%. Gosh darn it, K-Yield. You have got to be kidding me. Let's run K-Yield and Alti since the strategy change for Alti, which was December 1st. I mean, that's not a great look for K-Yield. However, K-Yield's NAV is down 10%. ULTY's NAV is down about 12. So if you're, you know, so NAV people probably still going to want K-Yield, but I mean, anyway, this is really a bad look. I don't know what's happened to this fund. This used to be a good fund. I mean, it still is. It's not having a good run of it. I just haven't looked at it lately. I bet they're heavy in tech and high beta. I mean, not tech, probably AI, and the AI pullback killed them. But they look like, you know, KQQQ is a fine fund. It has a great record or whatever, but it looks like it's fallen and it can't get up. You know, they made a lower high when Alti made a higher low and then kept going up. So anyway, all right, so let's go back here to the divas. QLDY looking good comparatively. All right, so let's look at some other stuff. I have to go help my neighbor, so we can kind of make this a quick one. So if you guys have something you want to talk about, put it in the comments. I want to let's look at these option trades. Okay, I wanted to show you guys this one. I watched Mike Coe's show today. I really like his show. He really has a depth of knowledge on options and option strategies and stuff. I was telling Marcus today that I really think a big part of the reason that it's come back is because of Mike Coe. Mike Coe had a volatility-based hedge fund. I don't know, ever since he got on the investment committee, ULTY has been doing a lot better. And I think it was his idea to add blue chips and add that third leg option. They do some kind of 3-leg option strategy now that's helping out a lot. Yeah, since Altis and YMAX, maybe I should think about switching. I don't have a problem with YMAX. Why not have both of them? I like how Alti doesn't drop as fast. But yeah, I hear you. But I really like that put protection. That put protection comes in handy in ULTY. But yeah, I hear you. Maybe I can think about that. Yeah, YMAX has fallen and it can't get up also. But anyway, yeah, the strategy change hopefully is right on time. It looks just like WPACE chart. I mean, they've fallen and they can't get up. I mean, it's bouncing a little bit, but I mean, heck, ULTY isn't even supposed to be good at getting upside, but it got 20% upside in the same time that this other one got 2.5%. Oh, geez. I don't even know, Marcus. Marcus wants to know how's Alti. Let's go look. Let's go look. It was day. I mean, yeah, we haven't looked into it today specifically. Okay, and then I'm going to look on the chart too. So, I mean, obviously that's not great. Let's do it like this. Let's run Alti and, well, we have a chart, but let's run Alti and blocks. Because that's a fair comparison. In more of a fair comparison than ULTY and ULTI, because ULTY will probably always do better on the way down than ULTI because ULTY has a permanent hedge on, like I say, and that's the beauty of it. And that's one of the main reasons I like it as much as I do. But let's check it. So let's check it this way, though. Let's look. Okay. So yeah, I want to scan out a little bit. Let's look at ULTI on a 1-day basis. And got to get my DOM off there. He was down 3.18. I mean, it did a heck of a lot better than blocks, but there's lots of days that blocks does a heck of a lot better. So, but not today. Not today. And how bad is blocks really down? I'm going to have to look again. Was it really down 5.3? Jiminy criminy. Come on, blocks. Even BITK wasn't down that much. BITK actually was fine today. Down 1.2, that's like unchanged for BITK, but it's getting hit in the post market. Anyway, okay. But yeah, alt-I is not looking particularly healthy either. All right. So I was watching my co-show today, and I really think he's a big reason. He's really good at options and volatility trading. Anyway, but I like his show outside of that. So they had an interesting trade on, and I think maybe he's watching this show and copying for me because it looks like something I would do. Just joking. But he was talking about a way to get long XOP, which is what is XOP? I mean, I know what it is, but let's go look and see what's in it. It's the State Street Spider Oil and Gas. Do they have one of these that has an income component? Why isn't there an XOPI or an XOPY, or is there? Anyway, but I don't remember. Anyway, forget about the income component for now. So this thing is American oil companies Magnolia, Permian Resources. That's a good old Texas company, probably. Chevron, Exxon. Now, California Resources, never heard of that, but that's CRC, huh? Occidental Petroleum, Texas Land Pacific, Venture Global. Anyway, all right. So his idea was, and I think it's a legit idea. He said, if you want to get long, have exposure to this. If the war keeps going on, and and this area stays hot, you could do it like this. And not get much theta decay. Well, he called it nominal theta decay on a go nowhere move. So, or it would have to drop more than 9.4%, and then you would lose, but you lose at the same rate as if you bought the stock, but you don't start losing until it goes down 9.4%. So if oil went down 20%, you'd be down 10%. Went down 30, you'd be down. You guys get it. But it has it's because you sell a put to buy a call. Anyway, I thought that was interesting. So I just saved it when they were talking about it. It goes out to June, and it's one way to play it. Of course, there's a downside to everything. For every give me, there's a gotcha. The gotcha is it makes the same amount of money as stock, but only after it goes up 12%. And that's at expiration. And of course, let's say if you held it, till May 14th or something, you guys can see it doesn't kick into gear until oil really goes up. But this would be a way to play a bullish play in oil. So let's go check. Of course, he should have done my 35-40 bull call spread in B&O. I don't know what the guy's thinking, but he likes to go out further than a few weeks. This just goes to March 20th, but this is, I wish I would have spread the legs further apart. But anyway, luckily, Brad has one with more risk and more reward. So, all right. So let's see what else we have. But my aggressive protection plays got smoked today. These things were killing it. But then when the market rallied, this thing's only down It's down 96 bucks. Volatility this morning was at 25. Now volatility is at 22. So let's kind of simulate that. So this morning, the profit and loss looked like this, and the price was also, well, the price was also down about, I mean, how much did it rally? I mean, it still closed down 1%, but it was down, it rallied about a point or something. The SPY did. So yeah, this morning is a big winner, but then the price goes back the other way, which would have been even if the volatility stayed up. But of course, as you guys know, as price goes up, sometimes volatility comes in. So anyway, right now you have that's the state of this one right now. It lasts till the end of the week, and you want prices to either go up from here 3%. I know that's probably not going to happen, but or you want prices to keep going down. But this is an overlay. This is intended as a hedge. If I mean, you don't really want prices to go down, but I mean, that pays off if prices go down. You can even see what happens. If you had 100 shares of SPY, it perfectly hedges it, like I was saying the other day. And it made it where it makes it where you still have the potential for upside because it doesn't cost you that much on the upside. But if it goes down, it locks out your losses. In fact, you can even win a little bit. It locks out your losses from SPY. All right. So let's see what else we have over here. B&O, hedge for next week. This one, and this was a 3-leg seller. Well, no, this is a seagull. This is selling calls to buy puts. Anyway, this one's looking really good, but not as good as it looked this morning. But as long as the market doesn't rally more than 1.7% from here, you get to keep the initial credit. All right, Marcus, what's going on? Blocks is doing better after hours, still red. Yeah. And Blocks, it's whatever. But I mean, I was disappointed though, because I mean, even because crypto didn't have that bad of a day. I mean, still in the long term, it's going nowhere. I mean, it's not like it's breaking out, but all right, Marcus, let's check out ATTR. Let's see if it can beat Alti the past quarter. No, but it looks really good though. I actually like the way that looks. I mean, let's look at ATR for something that's comparable versus Chaos. I know Chaos is in it, but yeah. Or there's another one called that's a good look. That's a good look. Thanks for Marcus got me into that one. I mean, I knew about it, but I was going to buy Chaos, and it's looking like it was the right thing to do to get ATTR. What's the other? There's another one. No, not that one. That's what about old T-Oak? It's just box spreads, but that's impressive that ATTR is outperforming box spreads, and it gives tail risk protection. But a box spread does too, because a box spread can't go down that way. But this one anyway. I mean, they both have tail risk, but not really. Box spreads just won't lose money if the market goes way down. They'll keep making 4 or 5, whatever the interest rates are. ATTR, in theory, it's new. The NAV can actually appreciate in a panic situation. But most funds that do that, they bleed to death when the market's going at normal, and this one doesn't. So yeah, that's an impressive fund. Yeah, I do too, Marcus. And what about you and I were there? You're the only person I've been able to, or I don't talk is the wrong word, but you're the only person that's got YQQQ. I mean, I love that fund, but that's not really tail risk. But that thing's, the thing about YQQQ is it's not even down that much on NAV. I mean, let me compare it. YQQQ, who should I compare it to? I was looking at it today. Let's just look at it compared to the SPY, because that's what or the Qs, because that's what it's made to hedge. Or, I mean, it'd be great for somebody that had triple QI. or something, and wanted, you know, it had a 90% of that and then 10% Y triple Q, you know, or whatever. It would hedge a, you know, a high yield position or, anyway, let's go look at this. Yeah. So, I mean, the NAV's down $2 this quarter. So, but that's only a quarter, but let's go over the past year. I was just surprised how good the NAV performance was. I think I know why it is too, because it's not going to have good NAV performance in a panic. No, well, none of these will, but especially because it'll, you know, but in a grind down type market, and especially somebody like me that's just dripping it back in there. I mean, it's, you know, it just, I mean, so yeah, 17 to 12. I mean, that's not too bad for a year and a quarter. I mean, I hope you don't need it, but if the market, it could turn into a winter if the market does what it did in April or you know, during COVID, it would look like a winter. Like I say, hope you don't need it, but at least it's paying the yield, and I'm just putting the yield back in, so I'm averaging down and getting lower prices. I'm surprised that it's not down more. I mean, but I like that. I like that it's not down more. Now, let's just look at the past quarter, and let's see how much better it's doing than Salty. Yeah. Gosh damn it, Salty. All right. Well, it's doing a lot better than Salty. All right. So what else is going on? Yeah, I know it. They're doing a tail risk strategy, and it's the multiple strategy. You know, what's so cool about Tuttle's strategy is he's a long volatility strategy that's just buying an at the money strangle, and that, or a straddle, whatever. But that, if it's at the money, it'd be a straddle. And that when the market's down 3%, those pay off, or when the market's up 3%, those pay off. And they lose when the market is inside the expected range, you know, up 1%, down 1%, they're big money losers. But if you have a big volatility day on the way up or on the way down, they'll make money. You know, like a 4% down day or whatever. But lots of strategies like that, that's not tail risk. That's just being long volatility. But then in addition to that, they have a deeper hedge. So it's like two levels of tail risk. Yeah, YQQQ is super impressive. YQQQ and Winter are brilliant. I bet you all BTC income invest wish. Yeah, yeah, me included. I wish I had it. It's been an incredible one, but I mean, they're doing the same thing that YQQQ is doing. So the parent asset for Winter is down 50%. So that's exactly what YQQQ will look like if the market goes down 50% and, you know, or 30%. I mean, it's going to do the same thing. Especially if it doesn't happen all in one day. But, you know, in a 2022 situation, I think YQQQ would be great. All right. So what else you guys want to talk about? Let's see if we have any other stuff to talk about. You know, hedge for next week, the Qs, NVIDIA, bullish play, and Brent North Sea. Oh, here's the one that Brad did. I didn't know I saved it. Then I did my own, you know, scaredy cat version, and I saved that one. But anyway, here's the bigger one. So I think I heard a rumor that he was on third base today and did not pay himself. So, man, it would have been tempting. In other words, up 3, it's about $100 trade, and he was almost at a triple, I think, this morning. But, you know, it's fine if the situation keeps deteriorating, that's, you know, he can cash it in. And if not, if oil goes right back down and stuff, it probably means the war ended or the news got better. You know, the straits are back open, and that would be fine too, or not fine, you know, because then I would think that the rest of Brad's stuff will be doing well. So hopefully this serves him well. But yeah, it'd be tempting not to take the triple. And I know it's hindsight because you could do this. You put the same thing on again, spend another $100 and just scoot it out further. And so you pay yourself 300. And then so you would put 200 in your pocket and then spend another 100 on a structure like this if you thought it was going to keep going. In other words, roll the trade out. And that way, if oil does come back after, then you've still locked in your $200 profit. Lock and load, baby, lock and load. Winner's up 50% since inception. That's crazy. Now that's not NAV, that's total return, of course. But yeah, that is crazy. Let's check out Winner versus YQQQ. Man, that's insane. I say they aren't really for tail risk, but it doesn't look like it had any problem getting upside back here. It went up 20% in a few days. I mean, that they aren't for tail risk though, because but still though, I mean, but these guys are they do call spreads instead of just calls oftentimes. So maybe they had it call spread. Or in this case, it'd be put spreads because it's bullish. But you know what I mean? They don't, whatever they're doing there, that was a wonderful move. Now, they gave it all right back. But, I mean, still to be up 10%, well, that's just for a quarter. But to be up 10% in a quarter, okay, so now I thought that was a year. That big move was when Bitcoin crashed. But then strategy bounced back and was up like 10% the next day or 20%. Or that was a crazy move. So, but you could see there, if Bitcoin would have kept crashing, if strategy would have kept crashing, this thing can get upside on the downside. Let's do it like this. Let's go back further and look at it. Yeah, that is, like Mark said, up 50%. But the NAV's down, of course, and that's fine. That's to be expected. I would say keep up 50% on NAV. That'd be incredible. If we ran it from low to high, the NAV wouldn't be down. If I pick down here for the start date, the NAV's probably up, but just over the past, whatever year, NAV's down. Look at all those dividends, $28 freaking dollars. That's the thing that people don't also understand. And it's just especially if you're dripping, you're getting, the drip is causing you to average down and get lower prices. And then you're buying more shares. And then if there is some kind of panic in strategy, the volatility goes up and the dividends you're able to catch is huge. That's incredible. I mean, if you equalized it, it would be about $9 of dividends in YQQQ compared to 28. That's nice. So it's about Winner's paying 3 times the yield, if you annualized it or whatever. That's been a good one. That has been a good one. Yeah, that has definitely been a good one. All right. So everything else to talk about, I think I'm going to go help my neighbor, unless there's any other last minute questions. I mean, there's 20 of you guys here. I hate to leave you, but I promise we'll do a good show tonight. My neighbor has memory issues. I mean, anyway, I ran errands with her today and we were at the store and I said, do you need anything? Because we had to go next to the store. I said, you need anything from the store? We had to go to the UPS store. So she can't get around that well since she hurt herself. Anyways, and she said no. And then she called me, right before the show and she goes, could you take me to the store? I need to get some potato chips and some soda or whatever. It wasn't soda, but anyway, so I want to go do that because maybe she's wanting to get stuff to make her dinner. It's 4:40 here. Old people eat early. So, all right, guys, but I'm going to get out of here. Now, remember, barring any last minute questions, if somebody wants to talk about something, throw it up. She's fine. She can go whenever. I mean, she told me just whenever, but barring any last minute questions, let's do Tesla. Should we do Tesla Tuesday or 2 for Tuesday? Let's see, 2 for Tuesday. So we could do, I think last Tuesday I did T and U. Maybe I should do T and E, or maybe T, U and E, or, I mean, do we really want Tesla Tuesday? What else? We could throw in other stuff. We could call it Big Tech Tuesday. So it could be Tesla, NVIDIA, and we could also throw in, Hood, since we didn't do it last night. Or we didn't do Hood or Coinbase last night. So we could do Hood, Coinbase, Tesla, and NVDY. Call it Big Tech Tuesday, something like that. But then tomorrow on Wednesday, I want to do diversified funds, and then we'll have closed-end fund Thursday, and then who knows what on Friday. But anyway, I think it'll be a good show. Remember, consult a professional advisor for all your financial advising needs. They're licensed and they're, and they're regulated, and you can sue them. I mean, if they give you bad advice, then they carry insurance. There's all kinds of good reasons to have a professional advisor. If you'd like to support the channel, you can feel free to do so at paypal.me/Max Convexity. I appreciate that. Outside of that, I'm going to thank you guys for being here. I checked for any last minute questions. But there aren't any. It's been a good crowd this afternoon. Thank you so much for being here. And I will talk to you guys soon. Have a great day. And I'll try to do the show early tonight. So that's probably her. She probably forgot she called me. Anyway, I'll talk to you guys later. I'll do the show at 8 Eastern. So be here. All right. See you.